Good morning, this is Jack from Charting the Markets Crypto, and this is the pre-market webinar for the morning of Friday, the 24th of April. My disclaimer, I do this for educational purposes only. I'm here to share my tactical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer trend charts. I'm not here to shoot trading signals. This is a video for paying subscribers at ctmcrypto.substack.com. It is published on YouTube after a delay of 3 days. All right, great. Let's have a look at Bitcoin, which obviously is still testing the weekly middle band, which is a strong resistance level, and we're seeing a similar test happening on Ethereum, which has tested both the 200-week moving average and the weekly middle band for each of the last 2 weeks. All right, on the daily chart, we've still got a daily RSI 5 sell signal fixed on Bitcoin. We've got one on Ethereum, and at the moment, my working theory is that we're topping out on bonds, and this might be we might be about to start the move down to hit the bear flag targets at the retest of this low here on Bitcoin at 60.1k. Okay, here we've got a pretty decent looking rising wedge with a slight overthrow here. We've got a nice looking double top, and obviously that hasn't broken down yet, but I'm thinking it well might. We shall see. All right, looking at Solana. Solana, the move up has been a lot weaker. We don't have a daily sell signal. On the hourly chart, I'm wondering about forming a possible triangle here. But the bottom line is here, we had an original bear flag that broke down, and we're waiting for it to go back and retest the low. I'm thinking we might be forming a larger triangle, but that doesn't have to be the case. We did have an IHS which broke up with a target at a retest from 97.66. At the moment, that's looking, it hasn't failed, but it's not looking as though it's going to make target. For a fail, it needs to get below 81.31, at which point that's failed, and the target would be at a retest of the low at 67.65. All right, looking at Ethereum, obviously we've tested the weekly middle band this week. On the daily chart, we've got another RSI 5 sell signal fixed. We don't have as nice technical bear flag here as we have on the other two, but still not awful. And this looks like a bearish consolidation. It's a shallow move up, so which generally is preceding a retest of the low, which in this case is at 1746.93. What happens when we get there? Well, we've got an option. Either that can be the second low of a double bottom, or we can continue lower, which is what we did last time. Because here, this was the flag I was writing about in like November, December, and that broke down and it went down beyond the level where you'd expect to see a double bottom. And this one may do the same, or we could find support at the retest of the low and possibly see a move up. Do we have any indications that it might go lower? Only one, really. And that is on Solana, where we've got this original double top that happened after the high that was made at the start of 2025, and that broke down with two targets, one of which was in the 70 area, and that has already been reached, and the extension target was down in the 40 area, and that's a possibility. Although I got to say, these aren't bad-looking trend lines for an overall falling wedge here. I am wondering if we might be close to a short-term low. Having said that, in terms of Bitcoin, Bitcoin made the high in September, I think, or the beginning of October. Pretty consistently, we've been seeing that bear markets in Bitcoin last about a year. And obviously it has not been a year. It's been about 6 months. So would I be expecting this to last a few months later? Yes, that doesn't necessarily mean it would need to go much lower in that time. We shall see. But I'm looking for the bottom of this bear market in kind of the October to December period, and clearly we're not there yet. All right, great. In that case, let's have a quick look at questions. On Bitcoin, could we be creating a large right shoulder? Hang on. Not really. If you look at the daily chart here, there's no real left shoulder here to be making a right shoulder against. So I was thinking that that's the way this might end, but to do that, really, we'd need to get up to 58k here and form a right shoulder, and that would give us a setup to get us back to the highs. But I think it would. We will see. But In terms of equities, well, I'm going to be writing more. I'm going to be working on a post. Might be out Monday, might be out of the weekend, could be out today. But what I'm going to be writing about is we're on a timeline. Obviously, I assume you read the post I did about the relevance of the war, and it was all really about the Strait. But we've got a couple of big deadlines coming up. One, the estimate is at the moment that basically the reserves that were released and the oil that was on the sea, etc., that basically will have run through all this by about May the 10th. At which point, the disruption gets real. More reserves could be released, but otherwise we're going to start seeing oil going up a lot at that stage. The other thing we've got happening is that obviously Trump doesn't have the authority to declare war. He is allowed to basically have a military operation that lasts 2 months, but after 2 months, then he's got to go back to Congress and ask for authorization, which, to be honest, he might struggle to get. After that, if he doesn't get that authorization, really he's got another 30 days, but with the understanding that he's got to be out of it after that 30 days. So that's going to have an impact on the war. But this May 10th deadline, I mean, it's an estimate, but nonetheless, that is the shit gets real date. And if at that point we start seeing oil prices skying up with a target in the 200 plus area, then that's when it really gets real for the economy. And that's what I'm thinking would be the most likely time, i.e., over the second half of May, to start seeing some significant declines. We shall see how that goes. They might allow them, but I've got to say, Trump is historically unpopular. He's more unpopular than Nixon was just before he resigned. And Walsh isn't getting confirmed at the moment because there's a block on it until the White House drops the investigation. This trumped-up investigation into the Fed over the renovations. So at the moment, Walsh isn't getting confirmed, and it's such a thin majority in the House. I think it might well, and given that basically this war is extremely unpopular with the American people, and the Republicans already look as though they're in deep trouble in the midterms. The question is, are there enough Republicans who will just, drink the Kool-Aid and do whatever Trump wants to actually get the bill through? That's a question. That is a good question. So we'll see how that goes. But I'm thinking that we might start seeing serious declines in mid-May. Honestly, this is kind of feeling like, because this could be a big move down a la COVID. Obviously all man-made this time. Although I always wondered if COVID was man-made, of course. But this is, I'm thinking this period kind of seems like February. The toilet paper is already gone from the supermarkets, so we're already seeing a lot of people are aware of what's happening, but the market is still oblivious. But the smart money was emptying the toilet paper out of the supermarkets. I think we'd run out of that by mid-February, but we only made the high on about the 22nd of February on SPX. The market can take a while to just wake up, and I'm wondering whether that's what it's doing here. All right, great. In that case, well, I think that's a wrap, mate. Everyone take care. I'll catch you again on Monday. Have a wonderful weekend. All right, cheers.